Good afternoon, everyone, and welcome to SPINDO's full year 2024 result call. My name is Felicia Priska, and I'll be your host and moderator today. We appreciate you for joining us, and we are looking forward to sharing our company performance with you. Just a quick reminder that this meeting is being recorded. We will start with an overview of SPINDO's performance for the full year of 2024. After that, there will be a Q&A session led by Pak Johannes as Chief Strategy and Business Development Officer, Corporate Secretary, and Investor Relations, and with Pak Teja Sukmana Hudianto as Vice President Director. Now we can start with the presentation. Okay, so we are straightforward to the overview of full year of 2024. SPINDO delivered a record net 5.2 due to 25% drop in global HRC prices. Gross margin stood at 18.1% and net margin at 8.7%, exceeding our targets of 18% and 8%. To strengthen our financial position, we successfully lowered our debt to equity ratio to 0.64 times and reduced interest expenses by 11% and G&A costs by 13%, enhancing of free cash flow. Operationally, we expanded our production unit in Gresik with Unit 7. That projected will be improving our logistics speed by three times faster. Additionally, our investment in high-tech ERW machines that targeted API certified oil and gas pipes will further drive high margin growth. With a strong balance sheet, ongoing ESG efforts, and strategic expansion, SPINDO is well positioned for sustainable long-term value creation. Okay, this is our revenue and margin graph. Despite revenue declining to 6.12 trillion, SPINDO maintained a profitability growth with a net profit rising to 530 billion rupiah. Our profitability margin remains strong, supported by automation, digital transformation, and supply chain efficiencies. Looking ahead in 2025, we project further margin expansion as we scale production, optimize costs, and enhance operational efficiencies. Now we move on to the ROE and ROA. SPINDO continues to prioritize shareholder value, demonstrates in our ROE of 10.5% and ROA of 6.4% in 2024. Our dividend yield in 2024 is 5.3%, our highest. This is reinforcing our commitment to stable shareholder returns. Given sustained profitability and strong cash flow generation, we are considering an increase in the dividend payout ratio to further enhance shareholder value. Now we move on to the working capital. SPINDO has significantly enhanced its liquidity position, ensuring a stronger financial foundation for growth. We can see in the current ratio increased to 326%, and quick ratio improved to 103%. reflecting efficient cash and receivables management and enhancing financial flexibility. Additionally, our debt to EBITDA ratio remains stable at 3.2 times, ensuring that leverage remains at a manageable level while supporting future expansion. These improvements is also for long-term financial resilience, providing the flexibility to invest in capacity expansion, optimize cost structures, and deliver sustainable shareholder value. Now, in funding structure, as of 2024, uh, our our long-term and short-term composition have changed, with our long-term is larger than our short-term. Uh, we are also diversifying our funding sources beyond bank loans, as to include finance leases and also in capital market. Now, this is our public offerings. Recently, we issued a sustainability-linked bond in July of 2024, amounted to 1 trillion rupiah. This issuance impacts positively to our financial structure. With our SLB, we are committed to generate more renewable energy by installing solar panels to our production units, with our target to reduce carbon emission. As of 2024, we exceeded our target by 200% by increasing our capacity of our solar panels to 682.5 kWp. Now, for cash flow, SPINDO generated 893.06 billion in net cash flow from operations, supported by robust customer receipts of 6.16 trillion rupiah. Despite 264.7 billion rupiah in investment outflows and 302 billion rupiah in net financing outflows, we remain financially strong and well-positioned for future growth initiatives. We have continued to enhance our sales mix with a higher contribution from API-grade pipes, which are widely used in oil and gas projects. Additionally, we are optimizing sales in high-margin, high-value products, as shown here in mechanical pipes, water pipes, stainless pipes, poles, and API black pipes and spiral pipes. This had a positive impact in boosting our sales in the last quarter. We can also see that the oil and gas sales composition increased from 0% in 2018 until 5% in 2024. This aligns with our commitment to increase our sales in oil and gas projects. This year we source raw materials dominantly from global vendors, as certain projects require specialized materials that are not available domestically. Additionally, global raw material prices are significantly lower compared to the local ones. Now, as we can see in the HRC price, we can see that the black pipe average selling price remains strong at 16,000 rupiah per kilogram, and the local HRC is 10,200, and the import HRC is 8,500. We can see that the gap is quite big between the local and import. Now, while the HRC prices have fluctuated in 2022 and 2024, the overall trend shows a decline in mid 2023 and 2024, and creating a more favorable cost environment. The consistent gap between the raw material costs and the selling prices continues to support profitability in Spindo. Now, going forward, this is our target for 2022 to 2025. Majority we have already completed the goals, including the stainless steel pipe, the 2.5-inch API pipe, and also in improved inventory. And we are currently in progress of the big diameter carbon steel pipe in relation to the Unit 7 in Gresik. Now, this is our uh, map for the sectors. So we can see the production unit is located near the waters, and it only 15 kilometers. This production unit will focus on the projects near the site. Now, Unit 7 is expanding with two brand new high-tech machines that will produce pipes up to 8 inches and another four large diameter, both featuring advanced robotic technology. These machines hopefully will align with security and reinforcing our commitment to innovation. Now, okay. Now for market outlook, Pak Johannes will present. Uh,
Thank you.
Pak
Yeah, Priska.
Johannes.
So I would not be too extensive on the market outlook, especially on the global economy or domestic economy. I think our fellow analyst is more knowledgeable about it, but I would just like to highlight several issues here. I think one of the most interesting issues is the tariff by Trump. Yeah. One is interesting is now we are now fight equally, yeah, because the tariff also implies to Canada, India, uh, Korea, which previously do not uh, imposes by tariff. Yeah. So in a way, our product now have more chances of fighting with them. Next, hello. Next, hello. So this is the price of hot roll coil, the dynamic from 2021 to 2022, 2024. Yeah. So basically, a lower price for hot roll is advantageous for Indonesia because it's in line with government initiative to reduce the construction cost and saving. Also, it enhance other industry as well, like automotive, furniture, and everything. Next, hello, hello. This is the correlation just to show that a lot of question towards us how is going to be how is Pindo profitability given the hot roll coil price it's expected to be still under pressure in the future. If we see actually a lower hot roll price is beneficial for us, because with that it can boost our volume, and uh, in turns enhance our margin as well. Going forward, yes, it is true that I think the steel price is still going to be under pressure because of the oversupply. Now we have also we need to take a look at the iron ore price and coking coal price. If it is still relatively low, it's okay. But if it is going higher, means there's a lot of demand from the steel mill, and it will create further oversupply and eventually will depress the price. Next. Okay, to you, Priska.
Udah lanjut. Oke. Oke, thank you, Pak Johannes, for the presentation. Now, for the financial projection in 2025 to 2029, SPINDO's net sales are projected to grow from 6.12 trillion in 2024 to 10.79 trillion in 2029, with a 76.3% increase. Gross profit will expand from 1.1 trillion to 2.02 trillion, reflecting our focus on high margin products and cost efficiency. Our net profit is also projected to surpass 1.25 trillion by 2029, reinforcing our ability to generate cash flow for reinvestment, debt reduction, and shareholder returns. Now, these growth projections are supported by our strategic investment, strong financial discipline, and market expansion initiatives. Now, this is our projects as of 2024 that are completed and ongoing. Okay, thank you for listening. And now we can move on to the Q&A session. Pak Johannes.
Okay, thank you. First, we have a question from our invitation. Go through. Pak Teja, again, question on the steel price and our ability to pass through the steel price volatility and or our chance to improve profitability, Pak Teja. I think it's best for you to answer this one.
Yeah, basically, it's not a new question. It's always have this kind of same question time to time. Yeah, and maybe based on our record, yeah, we can show that we can pass through, and even though the steel price is going down, so we can still get a better margin. So this is basically, yeah, as Mr. Johannes already explained, as long as oversupply is still there, the pressure of the steel price also still there. Yeah, and this time it's really different because of the last time is mainly because of the import, right, from China and others. But this time in domestic also there is oversupply in the steel, especially on the hot rolled coil production because of the 3 new mills for the start production last year, and they will competing to get a share in this market, Indonesia market. This is basically not bad. Yeah, it's also good for Indonesian, and we can have a good price of the steel, and we can be more competitive in this steel industry, and we can even export more. Yeah, so Indonesia have a lot of benefit because of the now a lot of country try to protect by themselves. Yeah, So then lot of country already like US already, yeah, and also the even like Japan, Korea, also Vietnam, and also Mexico and other a lot of even EU also same. Right, they try to protect themselves, and fortunately Indonesia not in the list. Yeah, so that's why we feel that we have a lot of benefit. Hopefully, all steel mill in Indonesia also can enjoy this. And again, based on the for us, the important thing is how to get the project, how to get the order from our customer. So as long as we can still collect this kind of order, yeah, we believe so we can enjoy even though steel price is going down, we can still enjoy the good profit margin. Yeah, but yeah, so steel price I think still will be still under pressure. Yeah. But Indonesia also is depend on the currency. Yeah, as long currency because currency also not stable, rupiah also weaken. Yeah, if you see in charts now, I think rupiah is the worst currency maybe. Yeah, we can not compare to other currency, especially in this region. Yeah, so that's why even though maybe it's, steel price in China is going down because of the rupiah weaken, and steel price in Indonesia not weaken so much in terms of rupiah. Yeah.
But yeah, also with the connection with price, there's a question regarding whether we follow LME price or we follow other price standard.
No, we don't follow either. Yeah. So we just look for the market. For every product also have a different price. So some product are strong, yeah, so we can get a premium, so we can still sell higher price, yeah, compared to others. And some product we have to fight and we fight.
Yeah, I think it's worth also noting that the Indonesian market tends to follow Chinese hot roll price as a benchmark ya Pak ya, rather than use US ya.
Yeah, but not really. Basically, Indonesia is we have a steel mill like Krakatau Steel, also Krakatau Posto. Is we are follow their price rather than the international price.
Okay, thank you Pak Teja. Um, okay, there's question from Pascalis. 4Q revenue is considered highest in last year. The only record breaking is only on the first quarter 2022. Is it because there's a big order or anticipation of increase of PPN? Will it be another big Q1 increase in 2025? Pak Teja, you want to take that?
Yeah, Q4 is possibly so we got a lot of order, especially from the project. Yeah, so jump quite a lot. Yeah. So basically, seasonally, Indonesia is always Q4 is the highest demand because the end of the APBN, yeah, so end of the budget year. So but Q4 this time is not APBN, but mainly a lot of project from Pertamina. Yeah. So maybe to mention, Prabhu also mentioned about the downstreaming. Last time also Mr. Pak Jokowi, yeah, our former president also, they are focusing on the downstreaming and hilirisasi. Yeah, so industry. This is one of the lot of demand from these sectors. And also we see also the other is still demand from the especially commodity-based natural resource. Yeah. So as like some mining, yeah, like Freeport, also Aman Mineral, also still expanding. Yeah.
Yeah,
So
thank you.
next time also we will see some demand from the downstreaming, yeah, especially Lusasi for the batubara for coal.
Okay, good, very good. Thank you, Pak Teja. So I would like to reiterate that the high order in fourth quarter 2024 was not only because of the increase of PPN, but it's more because of the more order from user, especially oil and gas related and commodity based industrial, which is good because the order is quite big and it's a multi months delivery. Another question from Pascalis is with the efficiency in government, especially in the construction sector, how much is the impact to Spindo? Well, I think I need to, focus on the sectors that we supply, which is multiple sectors. So hopefully, the impact is not significant because basically, to construction sector or exposure is less than 25%. And not to forget that infrastructure and construction is not only done by government, but also by the private sector and state-owned enterprise or even municipal enterprise and municipal government. You want to add on that, Pak Teja?
Yeah, I know, but I think the government budget cut is value, right? The amount. Yeah, so I think we have a blessing because of the price is now is going down. Yeah, hopefully, yeah, based on the price also drop. So this also help. Naturally, we have the government budget cut.
Yeah. Okay. Pak Hilman asking, there's increase of cash in our book. Is it a preparation to buy raw material in quarter one? Not exactly, Pak. Because of the excess of cash for our capex, as required as the use of fund in the SLB. Also, our idle cash from operation, but not entirely to prepare raw material. We also use the cash. We will use the cash for capex as well. And another question is whether the Cortex issues impacting to our uh, impacting to our operation. Yeah, I'll leave this to Pak Teja. It's a very very delicate question.
There is some impact, of course, but it's fortunately not so much because of in the mid of February, government already announced we allow us to use the old system. This helped us quite a lot. Yeah. If they still continue ask us to use the Cortex, maybe the impact will be more and more.
Yeah.
Mm.
Okay. There's a question from Pak Theodore. Why there's a decrease of volume in 2024? Actually, the 2024 we have to remember that in the first quarter we have election, so at the time the order is a bit low, but eventually it is catch up in the last quarter. So overall, I can say that the volume 2022 and 2023 was flat. It's approximately on like 1 or 2%. I think 1%, less than 1% lower than 2023. And the next question would be, how is the performance for these 2 months in 2025? Pak Teja.
Q1 2025 compared to Q1 2024, of course, because 2024 basically Q1 is not so good because of the election. Only January was quite good, but February and March was not so good. So based on that, so Q1 2025 will be better. Yeah, of course.
Okay. Thank you, Pak Teja. Pak Yuda from Sukor is asking the reason behind the projected GPM and PM decline in 2025 forecast. Basically, the main reason is our conservatism, Pak Yuda. Actually, our GPM and PM in 2024 also exceeding our target. And when we create forecasts, we always be very conservative because it's always better to exceed the forecast rather than hit below that. So even though we forecasted that it will decline, but actually we are confident that we can at least maintain or even improve our margin due to the reasons that have been discussed and explained before. Yeah. Okay. I think another question, Pak. Will the new unit produce API pipes, and when is gonna be fully operational? Pak TJ, you wanna take that?
Yeah, yeah. Basically, not full all API pipes, but maybe will be majority for API pipes because of the we see growing demand for oil and gas industry in Indonesia. So we saw some of the news regarding the some project, yeah, especially for the gas pipeline project, gas project. Yeah, so we are monitoring this kind of project. Hopefully, also government also planning to build a lot of pipeline project. Yeah, I mean basically to replace the what's the usage of the LPG to LNG. So not only oil and gas, but also we see the demand for other items like oil and gas. Also, there is two oil and gas. One is pipeline, transmission, distribution, and the other one is for casing, for drilling. Yeah, so drilling is also a new item for us. So hopefully we can get this kind of market for drilling, not only in Indonesia but also in the overseas for export. And other side is the new product is a column, yeah, big column, yeah, for the structure. So it is also new items, and we hopefully we can introduce ourselves and we can produce, we can get some market share for not only in Indonesia also but also in export market. And the other one, yeah, the other is a small pipe tile. Yeah, small pipe tile is also one of the interesting items also for us. Yeah, because like Indonesia maybe still not so much, for using steel pipe, still mainly still concrete pipe. But in other country, the demand for this kind of steel pipe is quite big.
Okay. Thank you, Pak Teja. Now, I think one of the very important question, Pak, regarding the increased payout ratio of dividend. Can you give us some idea or some hint or some considering as well the condition of the profitability, and but as well we have to be prudent as well, Pak Teja, ya.
Can explain, yes.
Go ahead, Pak Teja.
Go ahead.
Sorry.
Go ahead.
Go ahead. Okay. So basically, as I mentioned before, it is the what's called it. It is the intention of the founder as well as the management to increase the payout ratio. Last time we distribute approximately 17% profit. Of course, going forward, we intend to increase that DPR. But again, we have to balance our condition, especially the liquidity in regards to the market condition, expansion requirement, etc. But as of now, there is no indication, or there's no significant factor that will lead to, I think, reduce of the payout ratio. But yeah, well, hopefully there's no significant adverse condition in the future. Cepat aja ya.
Yeah.
Okay. I hope that answer, Pak Dominic. Okay, and then another question. Is there any any particular steps by the management to reduce financial costs Well, actually, we already reduced our financial cost quite significantly. Our financial expense last year was only 210 billion, reduced 11% from 2023. That with the roughly similar liabilities. Yeah, if we recall back in 2016-17, our financial cost can reach like 290 270 billion. Yeah, so effectively we already reduced. However, our strategy is to further reduce, yeah, by taking opportunistic steps, yeah, especially by issuing capital market instruments that uh, optimize the market requirement as well as our cost of fund. Okay, another question. Okay, I think last question for today, Pak Teja. What will be the biggest risk of SPINDO in 2025, especially in regards to the sales aspect, Pak?
Mm. Oh, oh, yeah. Basically, risk is still a lot of risk, but we have to manage the risk. Yeah. So even though there's a lot of risk, but we still have to be able to manage our risk. Basically, it's not a lot of or uncertainty in the market. So uncertainty is one of the risks that we don't know about the currency, about the fluctuation of the price, and also about the political uncertainty. So now today, so one of the uncertainty because of the stock exchange dropped quite a lot, right? So we don't know so why. Maybe some rumors about the Sri Mulyani, or I don't know. Yeah, but it's a lot of uncertainty. Yeah, so we don't know. That makes a lot of volatility also in our currency. Yeah, hopefully, yeah, the government can manage this kind of uncertainty, and we can recover. Yeah. So in the second quarter to the fourth quarter. Yeah. But anyway, even though government can manage, but we have to manage by ourselves.
Okay, so basically, Pak Teja, if I could reiterate, basically the biggest risk is still from the macro perspective of Indonesia, Pak. Yeah.
Yeah.
No specific risk from particular micro sector in company itself. Yeah. Okay. I think that concludes the Q&A. Priska, you can take it from here again. Thank you, Pak Teja.
Thank you. Thank you.
Okay, thank you, Pak Johannes and Pak Teja, for the insightful conversation. Now, we can conclude our result call for today. Thank you for joining, and we are looking forward to sharing more of our insightful presentation with you. Thank you and have a nice day.
Thank you. Thank you.
Thank you, everyone.
Thank you.
Thank you.
Bye.